Welcome to this session of ZICA Academy tutorial. In this lecture, I want to examine materials, pricing issues, and stock valuation using first in, first out method, FIFO method. FIFO is an acronym for first in, first out. First in, first out. First in, first out. Under this method, materials are issued in order at which they are received into the store and at the price of the oldest batch in the store. Materials are issued in order at which they are received into the store. That is 1, 2. At the price of the oldest batch in the store. What this means is that materials are issued in order at which they are purchased and at the price of the oldest batch in the store. So that is first in, first out method. This means that before the recent materials will be issued, the oldest one will have been exhausted. By the time the oldest one are exhausted, then the next one to it will be issued. That is first in, first out method. The one that come in first will go out first. First in, first out. The one that come in first, first in, will go out first. That is first in, first out. And at the price of the oldest batch in the store. Not the price of sales, not the price of issue, but the price of purchase, the price of receipt. That is, your issue will be made at the price of the purchase, the price of receipt. Take note of that. Purchases are the item receipt. Purchases, that is receipt. Sales, that is issued. Take note of this. So, this method assumes that the materials are used up in the same sequence as they are purchased. It assumed that materials are used up in the same sequence, in the same order in which they are bought, in the same sequence they are purchased. That is first in, first out method. What are the advantages of FIFO method? Advantages of first in, first out method. Number one advantage is it is easy to operate. FIFO is easy. It is easy to operate. That is number one. Number two, it ensures that older materials are issued out first. It ensures that the oldest one, the older materials are issued out first. Then it is acceptable for accountancy and taxation purpose. That is number three. Number three, it is acceptable for accountancies and taxation purposes. It is acceptable for accountancies and taxation purposes. What are the disadvantages of FIFO method? Disadvantages of FIFO or FIFO. If you say FIFO, you are correct. If you say FIFO, it is equally acceptable. It overstates this method. Number one disadvantage, it overstates production cost and understates profit in the period of inflation. In the period of inflation, this method overstates cost of production. At the same time, it understates profit. Number two, production cost does not represent the prevailing market price since it is based on the oldest material cost. Production cost does not represent the prevailing market price since it is based on the oldest material cost. Examination questions involving the use of first in, first out method will require you to determine the value of closing inventory. And to calculate the value of the closing inventory, you will need to prepare the store ledger. So your store ledger. So your store ledger will contain a column for date, another column for particulars or details. Particulars or details. Then after this, you have another column for receipts. Then another one for issues. Another one for balance. Then, in each of the receipts and issue column, you have a column for quantity, then price, amount, or value. Quantity, price, amount. Same under the balance column, you will have a column for quantity, price, and amount. The currency used in the question, assume it is US dollar. So you have to put it under the price and amount. Then the units of the quantity, it may be in unit, it may be in kg or any other unit. So you put it under the unit. So this is the format for store ledger. Now let's take a question as work example. Keep watching. ATS 3 September 2024, question number 6. Castle Lion Limited trades in sporting jersey for Sokopa FC. The following information relates to the inventory movement for the month ended 31st July 2022. We have date, details, unit price in Leon, quantity in units. July 1st, we have opening balance of 3,000 units, price is 200. July 2nd, purchased at price of 220, at 2,000 units were bought. On July 4, issued 250, issued at the price of 250 Leon, and the quantity issued is 1,500. July 6, purchased at price of 230 Leon, and the quantity purchased is 2,000 units. July 11, issued at price of 260 Leon, and quantity issued is 1,500 units. On the July 19, issued at the price of 260 Leon, quantity issued is 2,000 units. July 22, purchased at price of 240 Leon, and the quantity purchased is 2,000 units. July 27, issued at the price of 270 Leon, and quantity issued is 1,500 units. You are required to A, determine the value of the closing inventory as at the end of July 2022 using first in, first out method. B, determine the gross profit based on the closing inventory valuation method used above. The name of the entity is Castle Lion Limited. So we have Castle Lion Limited. So In the first part of the question, you have to determine the value of closing inventories at the end of July 2022. So now you can prepare using FIFO method. Valuation of closing inventory using first in, first out method. You want to value the closing inventory using FIFO method. So I've told you, you have a column for the date, another column for particulars or details. Particulars or details. Then you now have a column for receipts, another column for EUs, another column for balance. And these three columns will be divided into quantity, price, and the value or amount. And the amount is in lyon. And quantity is in units. So units, quantity, price, and the value. Lyon. Units. The balance column will have quantity, price, and value. This is in lyon, and this is units. So lyon is the currency in the region. Now, we want to start posting. The first item, this is the opening balance or your opening inventory. So it depends on the question. On July 1st, we have the opening balance of 3,000 units. July, the transaction took place in the month of July. July 1st, opening balance. And the units is 3,000. 3,000 units. Opening balance. 3,000 units. And the price is 200 lyon. 200 lyon. 3,000 times 200, that will give us 60,000 lyon. That is the value. That is 3,000 times 200. That is 600,000 lyon. 600,000 lyon. Then you move to the balance column. So we have same thing you have here. You record it in the balance column. 3,000. The price is 200. The value is 600,000. That is the opening balance. On July 2nd, you purchased 2,000 units. July 2, 2,000 units were purchased. 2,000 units at the price of 220 lyon. So 220. So 2,000 times 220, that gives us 440,000. Then you move to the balance column. Remember, this was in existence, so it will be brought down. So you have 3,000 units at 200, giving us 600,000. Then the one purchased, since these were in inventory before and more units were bought, the quantities you have in inventory will increase. So you have 2,000 at 220, valued of 440,000. 2,000, the price is 220 and the value is 440,000. This is the total items you have in inventories. That means your inventories now increased to 5,000, 3,000 plus 2,000, making 5,000. And the value increased to 1,040,000, the sum of the 600,000 and 440,000. Some teaching will exclude this. They will just put 5,000 and 1,440,000, 1,040,000 rather. So they will not put the price here. They will put the total, which is 5,000. Then 1,040,000, they will not record it here. So they will not separate it like that. If you do it that way, it is still correct. So I want to adopt this as my teaching method. On the 4th of July, you issued 1,500. 4th of July, you have issued. You issued 1,500. Remember, the method in use is first in, first out method. And I've told you on the basis of the first in, first out method that materials are issued at the price of the oldest batch in the store. Now, the oldest in the store is this 3,000 at the price of 200. It means it is when this 3,000 is exhausted that you cannot move to this 2,000. But what you want to issue is 1,500. And this 3,000 exceed the 1,500. That means you can make your issue from this 3,000. So any issues you want to make will be recorded in the issue column, not the receipt column. So you have 1,500 from this 3,000 at the price of 200. That gives us 1,500 times 200. That gives us 300,000. That is the value, 300,000. Now, what you are left with in the store is 1,500 here. The 1,500 is still in the store since you have issued 1,500 from the 3,000 at the price of 200. That gives us 1,500 times 200. That is 300,000. Then this 2,000 is still in the store unused, and at the price of 220, that is valued for 40,000. Now, on the 6th of July, another purchase were made. 2,000 units were bought at the price of 230. July 6th, you have purchases. And the unit bought is 2,000 at the price of 230. 2,000 at the price of 230. And how much is the value of that? 2,000 times 230, that gives us 460,000. 460,000. So this 460,000 will be added to what you have in the store. You know, you are left with 3,500 in the store. That is the 1,500 and the 2,000. And now you are adding additional 2,000 to what you have in the store. So that means you have 2,000 at the price of 230, and that gives us the value of 460,000. This is what you have in the store now as at the 6th of July 6th of July. Then you have 11th of July. You want to make an issue of 1,500. You want to issue 1,500 on this 11th of July. I remember I told you we don't use the issue price. Issue price means selling price. It is the price of what you have in the store, the price of purchase that will be used to make your issue. So on the 11th of July, you have issued. So the number of units issued is 1,500. Your issue will be made from the oldest batch in the store and with the price of that oldest batch. The oldest in the store is 1,500 and you want to issue 1,500. So that means you can make your issue from this 1,500 you have. 1,500 at the price of 200 and the value will be 300,000. Now, you have exhausted this 1,500. So the only one you are left with in the store is 2,000. 2,000 at the price of 220, and that gives us 440,000. Another 2,000 at the price of 230, and the value of that is 460,000. Now, that is July 11th. On the 19th of July, you want to issue 2,000. So, July 19, issued. What you want to issue is 2,000. The quantity you have in the store is up to 2,000. That means your issue will be made from the oldest batch in the store. And the oldest in the store is this 2,000 and at the price of 220. So, and since you want to issue 2,000, that means you have 2,000. You record it in the issue column at the price of the oldest in the store, which is 220. And the value of that is 440,000. Now, you have exhausted this now. The only one you are left with in the store is this 2,000. 2,000 at the price of 230, and the value of that is 460,000. After the 19th of July, the next item were the purchase made on the 22nd of July. We have purchased July 22nd. We have purchase. And the units bought is 2,000 units at the price of 240. So bought purchases will be recorded in the receipt column. 2,000 at the price of 240. That will be 480,000. 2,000 times 240, that gives us 480,000. You go to the balance column and add this there. So your balance becomes another 2,000. You know 2,000 were in the store before at the price of 240. So we have 480,000. So the quantity in the store has now increased to 4,000 again. 4,000. So then on the 27th of July, you want to issue 1,500. July 27, issued 1,500. Remember, you want to make your issue from the oldest batch in the stock. And the oldest batch is 2000. So that means your issue can be made from this 2000. So you move to the issue column. You want to issue 1500 with a price of 230, and the value of that will be 1500 times 230. That gives us 345,000. 345,000. Then here you are left with 500 since 1500 has been issued from the 2000. So you are left with 500 there. 500 at the price of 230. And the value of that, 500 times 230. Then that gives us 115,000. 115,000. Then this 2000, you have not taught that. You have 2000 at the price of 240. And the value of that is 480,000. Then the closing inventories now. 500 plus, that is closing inventory. The closing inventory is 2,500 units. 2,500 units. And the value is 115,000 plus 480,000. That gives us 595,000. So that means the value of the closing inventory is 595,000. 595,000. This is the value of the closing inventory required in a part of the question. So the closing inventory is 2,500 units and the value is 595,000. So in the B part of the question, you are to determine the gross profit based on the closing inventories valuation method used above. So we want to determine the gross profit. So calculation of gross profit. Calculation of gross profit. So you are still using first in, first out method. First in, first out method. So to calculate, the amount is in Lyon. So to calculate gross profit, we have sales. Sales or revenue. Or revenue. Let me have this as working number one. Working one. We have revenue or sales for the period. Amount is in Lyon. The first items. Now let's go through the details. This is opening balance. This is purchase. Issued. I've told you issued at the sales made in the period. So we have July 4. July 4. So we have 1,500 at 250. 250 Lyon. 1,500 times 250. That gives us 375,000 Lyon. After July 4, another sales were made on the 11th of July. July 11. That is 1,500 as well. At the price of 260 Lyon. 1,500 times 260. That gives us 390,000. 390,000. After 11th of July, we have another sales which were made on the 19th of July. So 19th of July, July 19, and that is 2,000 units at the price of 260. Price of 260, loan. So 260. 2,000 times 260, that gives us 520,000 loan. Then we also have another sales which were made on the 27th of July. July 27, and that is 1,500 units at the price of 270 leon. 1,500 times 270, that gives us 405,000. 405,000. These are the sales which were made in the period. So if you now sum up this, 405,000 plus 520,000 plus 390,000 plus 375,000. So the total revenue amounted to 1,690,000. 1,690,000. So our revenue amounted to 1,690,000. From this revenue, you less cost of sales. Less cost of sales. Now, to calculate cost of sales, our cost of sales include opening inventories. Opening inventories. Now, this has been recorded in the store ledger. Now, the value of the opening inventory, that is what we have as opening balance, which is 3,000 units at 200 leon, and the value is 600,000. And that is what will be recorded as opening inventory for the period. The opening inventory amounted to 600,000 leon. 600,000. Then to this, we add purchase for the period. Purchases. And how much are the purchases which were made in the period? Let's have this as working number 2. Working number 2, purchases. The purchases are the receipt items given in the question. But remember, this is opening balance. The opening balance is our opening inventory, which was 3,000 times 200, and that is 600,000. That is how we got the 600,000 recorded as opening inventory. Then the purchases include, we have July 2nd. July 2nd, 2,000 units were bought at the price of 220 leon. So you have 2,000 units at 220 leon. And that gave us 440,000. 440,000 leon. Then after the 2nd of July, then on the 6th of July, we have another purchase of 2,000 units at the price of 230 leon. So that is 6th of July. July 6th. Purchase of 2,000 units at the price of 230 leon. And this gives us 460,000 leon. Then another one was made on the 22nd of July. July 22nd. So another 2,000 units at the price of 240 Leon. That is for 80,000 Leon. If you sum up this, it will give you the value of the purchase that were made in the period. 440,000 plus 460,000 plus 480,000. Therefore, our purchase is totaled 1,380,000. 1,380,000. From the working tool, we have the purchase of 1,380,000. If you add it to the opening inventory, then you have 1,980,000. From this, you less the closing inventory. Less closing inventories. And from our store ledger, we have the closing inventories of 595,000. So if you subtract the 595,000, you have as the closing inventory. You have the cost of sales. 1,980,000 minus 595,000. You have the cost of sales of 1,385,000. If you subtract this cost of sales of 1,385,000 from our revenue of 1,690,000, then you have the gross profit of 305,000. 305,000. That is our gross profit. Gross profit. So we have the gross profit of 305,000 Leon. This marked the end of the solution to the question. In my next video, I will examine LIFO method, where I will solve question from ATS3 cost accounting, March 2025 as word example. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.